Hello everyone, welcome back. In this tutorial, let's talk about changes in working capital. Changes in working capital is not the same as working capital. Working capital, this is the money that is needed for the day-to-day running of the business, and we calculate it from the balance sheet as current assets minus current liabilities. Then changes in working capital refers to the change in cash flow as a result of the changes in working capital items. With changes in working capital, we seek to determine whether the current operating assets or current operating liabilities have been increasing or not. Now, with changes in working capital, we look at the current operating assets, which are inventory, account receivables, and prepayments, etc. And we also look at the current operating liabilities, which may be account payable, accrued liabilities, income tax payable, and etc. Now, increasing current operating assets will result in the use of cash, and increasing current operating liabilities will result in the deferred use of cash by the business. Now let's look at these relationships. So here we've got the current operating assets. We have said that increasing current operating assets such as inventory and accounts receivable will result in the use of cash, which means that cash will go down as these current operating assets increase. And at the bottom there, we see that as current operating assets decrease, cash goes up, which means we might have collected cash from our receivables, sold more inventory, and now on the current operating liability side, is current operating liabilities increase, which may be accounts payable, cash goes up. This is because the company is not yet paid for those liabilities, so it is deferred the use of cash. And as current operating liabilities decrease, this means we have paid our suppliers and cash will go down as well. Now you need to understand this, that the changes in working capital is a cash flow item. Now you might have come across negative and positive figures on changes in working capital. Now when changes in working capital is negative, this means that the change in current operating assets is increased more than the current operating liabilities. So what this essentially means is that working capital has increased, reducing the cash flow, which means that the company used more cash. Mind you, we said increasing current operating assets results in the use of cash. Now, when such a figure is positive, this means that the change in current operating liabilities has increased more than the current operating assets, and actually working capital has decreased, which means the company used less cash. Now we have got the financial modeling and business valuation course that we are offering in partnership with Bindura University. Be sure to register today and become a valuable finance professional. Now let's look at a real world example. Here we've got Walmart Inc. consolidated statements of cash flow, and here we've got the changes in working capital items, and we've got under current operating assets, we've got receivables and inventories. Under current operating liabilities, we've got accounts payables, accrued liabilities, and accrued income taxes. And we are seeing that here in 2021 the company had a positive change in working capital. In 2022 the changes in working capital was negative, and from 2023 to 2025 the changes in working capital was positive. Now, we have said that if this figure is positive, what this essentially means is that the change in operating current liabilities is increased more than the current operating assets. And if the figure is negative, we have said that the change in current operating assets increased more than the current operating liabilities, which means the company used more cash or needed more cash to grow here. And so this is basically it, and this tells us more about the company's working capital management strategy, and also whether the company is collecting its receivables early or is stretching out payments to suppliers. So I hope this has been useful to you. Please share this video with your peers, and don't forget to like, share, and subscribe.